outside of emerging markets, where else are you finding opportunities?
If you look at our portfolios today, we've been adding to financials, particularly European financials with the more recent 2018 price declines. We think that valuations are approaching where they were in the financial crisis, deep discounts to book value, 7, 8, 9 times earnings, attractive dividend yields, and yet their fundamentals are vastly stronger than they were 5 years ago, 10 years ago. Much better asset quality, thicker capital cushions, more durable, sustainable sources of funding, higher liquidity. They have been improving earnings and ROA largely through cost cutting and refocusing their businesses where they can earn a good return on their capital. And so we think they're a compelling area in the portfolio today. So earlier in the year we added to SocGen, for example, in the portfolio. The other area we've been adding is in pharma. What we see are companies that are, again, at attractive valuations, 12, 15 times earnings, 4% plus types of dividend yields, good free cash flow, good balance sheets. And we think we're starting to see R&D productivity shine through, so good growth prospects. And yet the valuations, we think, are overly skeptical about the productivity of the R&D pipelines, and particularly skeptical around pricing. And what we'd note is that some of the areas where they're focused are in areas that are a little more insulated from payer pressure. Immuno-oncology would be an example, biologics would be another example. And so we quite like the pharma companies on an absolute basis. And then when we look around the market, we prefer them to consumer staples where we have a big underweight. They have better revenue growth, better free cash flow, and lower valuations. And so we have about 15% of the portfolio in pharma, compared to I think it's around 7% for the IFA, 5% for the ACWI ex-US, and a sizable underweight in consumer staples relative to the benchmarks.